All right, all right. Good morning, team. I know we got some people complaining in the chat about me starting late. I'm sorry. Listen, we started a little bit late today. It's all right. It is a big earnings week, man. We got a lot of stuff going on this week. We got Tesla, Google earnings. We have a bunch of earnings, to be honest. Big political news over the weekend, shocking the markets. You can see the SPY is up big this morning. We'll put the thing up so you can see the previous closing price right here at 548s, 549s. Tesla gapping up, nvidia gapping up, on all of basically up on the same news, which is the current administration is not going to run for re-election is the news here, which is, the big news, shocking markets, scaring everybody. And, some people are celebrating, some people are not. And, yeah, NASDAQ is up to almost 20K. SPY is up to 550s plus this morning. I normally start the stream at like 6:30 market time. Today we started it at 7:30. Yeah, just kind of trying that for a little bit. But yeah, let me know, how was you guys' weekend? Hopefully it was good. We are here. What's up, Sam? What's up, Anthony? What's up, Mike, Blaze, Julio, Freddie, Adventures, Phil, Helena, Deez, Jeff? What's up, what's up, chat? Good morning, good morning. All right, so we're here. Yeah, it's a big week this week, honestly. We got a lot of stuff going on this week outside of just normal stuff that I cover. Like this week specifically, again, chat, remember, we've got tomorrow, we've got flash and services PMI, manufacturing PMI data, existing home sales. Wednesday, we have new home sales. Thursday, we have GDP data. Friday, we have PCE data, inflation data. Next week, we got the JOLTS report. We got the ADP non-farm employment change, as well as the FOMC decision with Jerome Powell. We got jobless claims, ISM manufacturing PMI data, non-farm payrolls and unemployment. Next week, not this week, but next week. This week, specifically for earnings, we got a bunch of big boy earnings coming out that are going to wildly influence the market. First thing, we had Verizon show up today with 115 EPS versus 114 expected. They missed on revenue, though. They reported 32.8 billion in revenue. They expected 33 plus billion in revenue, and they missed it. So I'm guessing Verizon, without even looking at it today, VZ stock is gapping down. And yes, it is gapping down. Typically, one thing with earnings that you'll realize pretty easily when you watch them is that revenue outcomes are more influential than EPS outcomes, right? So what I mean by that is, for example, Verizon today expected 114 EPS. They actually came in better than expected. They showed 115 EPS, and this is EPS is earnings per share. It's how much they make per share. But again, if they miss revenue, which is what Verizon did, it's usually going to be the more impactful miss here. So they expected 33 billion plus in revenue. They showed 32.8 billion, so they missed revenue, and with that, Verizon gapping down. I think the phone companies like this are gonna fail eventually. Not fail, but I think they're gonna lose business over time. I think it's one of the most obvious looks in companies. I think is a lot of these phone companies are gonna be struggling. Outside of that, though, again, that's this morning. Tomorrow, I think this evening, we've got Cleveland Cliffs, a couple other small ones, but tomorrow the big boy startup. Tomorrow morning, we have Spotify, UPS, GE, GM, Coca-Cola, Lockheed Martin, Comcast, Philip Morris, Danaher, Polaris, Sherwin-Williams, Quest Diagnostics, Moody's, and a lot of other earnings tomorrow as well. So that's just a couple of earnings that drop tomorrow. And then tomorrow evening is the big one. Tesla, Google, ENPH, Visa, Texas Instruments, Cap One, and a lot of other ones too. So yeah, really interesting earnings season this year, with everything being up as much as it is. And then AT&T drops Wednesday evening. We got Chipotle, Ford, a couple other small ones. Thursday, I don't think we have anything. We got American Airlines, RTX in the morning. Yeah, so the only big earnings report we have this week is Tesla and Google tomorrow. I'm kind of bummed out. This earnings season, they did it again where they packed up a lot of big boy earnings same day. So Monday next week, we got Tilray, McDonald's. Monday evening, we have nothing. So they did all the earnings, basically big earnings one day. Yeah, so like Microsoft earnings are gonna be on like next Wednesday, July 30th. Earnings season start a little bit late, so like the big earnings are not dropping until a little bit later on. I guess they're trying to make them maybe closer to Nvidia's earnings, but we have AMD, Microsoft, Starbucks, Pinterest, Lemonade, EA, Match.com, and a bunch of other ones next Monday or next Tuesday, July 30th. So Tuesdays when they're packing them full, and then Wednesday we got Boeing next week. Trying to see. Okay, and so then Wednesday afternoon we've got Meta, ARM, QCOM. Thursday we got, yeah, see again, Thursday we have, listen to all this, like this is next Thursday, August 1st. Next Thursday, August 1st, we have Amazon, Apple, Intel, Coinbase, Square, Block, Roku, DraftKings, Mara, Net, Snapchat. Like every big earnings report you can think of here. It's disappointing that they're doing it like that. ExxonMobil up to, yeah. Make hamburgers great again. Honestly, Five Guys are pretty good hamburgers. They're expensive though, bro. They're expensive, but they're good. Yeah, so Tesla tomorrow, Google tomorrow. Yeah, so tomorrow the big boy earnings come out. Tesla drops at 410, Google drops at 4. I'm wondering when Google's earnings call is, because I might be able to cover both of them. All right, so the earning call is at 1:30 p.m. Pacific. So okay, so Google's is at 4:30. 4:30. Tesla's earnings call is at, because I want to cover both of them. I'm just trying to see what time they drop. Yeah, so quarter two earnings, July 23rd, tomorrow. I'm trying to see what time their earnings call. Their earnings call is going to be at 5:30 Eastern. Okay, so we'll probably be able to cover both of these, to be honest. We'll be able to cover Google and Tesla earnings is what we'll probably do. Are these earnings reports useful so we know which stock to look at on which day and what trend we are likely to see with them? Yeah, I mean, these earnings reports are relevant for a lot of different reasons. Main one being, like, it's going to show you where the volatility is. These earnings reports, the big boy earnings, right? So, like, Tesla, Apple, Amazon, Google, nvidia, Magnificent 7 stocks, and a couple other ones maybe. So, like, I would say the big 10 tech stocks. Let me like the big 10 tech stocks: Apple, Microsoft, Google, Amazon, Nvidia, Meta, Tesla, Broadcom, Adobe, and Salesforce. I would exclude probably Broadcom and Adobe and Salesforce, though. I don't really cover any of these. Maybe Salesforce, but I don't really cover any of these. I would say the biggest earnings reports that we cover here: Tesla, Meta, Nvidia, Amazon, Alphabet, Microsoft, Apple, maybe Snapchat. But just to put this into perspective, right? So Nvidia is the largest earnings call we ever do, right? The last Nvidia earnings call, we had over 10,000 concurrent viewers, like 10,000 people watching the stream. Our biggest stream ever. It's competitive with another stream we did with Jerome Powell, but we had a Jerome Powell stream that I think got pretty close to breaking our record, which was about 14,000. It's like 13.99 thousand viewers, concurrent viewers, right? But our Nvidia earnings call was what sparked that. Like, that gave us 14,000 concurrent viewers. So Nvidia will be the largest stream we ever do regularly. Every quarter Nvidia streams, at least that's how it's been for the last 6 months, and that's always subject to change. Intel should drop below 30. Somehow they messed up the whole Jenna. All right, so yeah, the Dow rallying 700 points in its best day in over a year, soaring by 700 points. It's driven by strong performance in industrial and small cap stocks, indicating a broader bull market beyond tech. Nvidia surged up. It climbed 150% since the start of 2024. Yeah, the problem with AI when you're trying to get it to gather news stories is it's too generalized. Like, this news is real. I asked it to give me the top market stories of the day. It said Fed watch, blue chip earnings. It said commercial real estate crisis. It said there's a growing concern over a potential crisis in commercial real estate, which could have significant ripple effects on the broader economy and stock market stability. I mean, honestly, it's so frustrating for me to hear this, to be honest. Why is it frustrating for me to hear this? This is better. I asked it to give me a little bit more recent stories. The reason it's frustrating for me to hear this, guys, is because, I mean, commercial has been struggling. Last 5 years. Commercial's been struggling for years, and it's not a shock that commercial has been struggling in this way. Commercial real estate specifically. Like, the problem with commercial real estate right now, there's a number of different problems. Okay, and these problems are inevitable. As Thanos said, they're an inevitability. They're gonna happen no matter what. And honestly, commercial real estate prices haven't been that bad. Like, here is AI giving me a graph on commercial. Like, look at this. So here's AI's commercial graph. So prices are still doing okay. Like, the problem with commercial, everybody's acting like it's the end of the world since we've been dropping in commercial since like 2021. The real problem here is the pandemic changed things, man. It genuinely changed things. How did it change things? Well, the big thing is that everybody started working from home, and they realized, like, business owners realized that you can work from home without needing to pack a warehouse full of people anymore. So you don't need to spend thousands and thousands of dollars a month on rent, all this money on computers and all that stuff to run and operate a business. Like, call centers are a big example of this, right? Like, technology has evolved past the point of needing to pack a warehouse full of people and spend tons of money on commercial rent. And so instead, what are they doing? They're having people work remotely. Productivity roughly remains the same, and more businesses are adopting this. And so what does this mean? You know, if more and more businesses are adopting this move, what does it mean? It means people are going to have less of a need for commercial real estate. And this is a very obvious future for us. Like, as technology gets better and better, people are not going to need to work and drive and go to a warehouse and do all this stuff to do mostly tech-based work, like computer-related work. It's just a very obvious future. And so with that said, I think commercial will continue to correct. And honestly, I think when you look at real estate overall, prices are up 50% plus over the last few years. And so, you know, those markets could, like, they need a correction. If prices of real estate continue to go high and high and higher, it's going to get worse. You know, inflation's already rampant. What we need is a small correction in real estate. People acting like it's the end of the world, like it's some justification for cutting rates, is silly. It's just unnecessary. We don't need to cut rates. So, yeah, let me know what you guys think. Do you guys think commercial needs a correction, or do you think it's a bad thing if commercial corrects? Yeah. Yeah, like, we'll talk about this a little bit later, but yeah. Honestly, in my opinion, commercial can handle a pullback. Like, it needs a pullback. It's not healthy for things to just go high. Like, again, like, people involved in the real estate industry are going to tell you that it's dire. You know, they're going to act like it's, and I'm a real estate agent personally, but people in real estate are going to act like it's dire that we cut rates. They're going to act like, oh, I'll tell you this. When rates were low, prices were still going down in commercial to a certain extent, you know? And so it's not time to cut rates just because of this. This is happening regardless of what happens in interest rates, in my opinion, right? People are not going to need as many commercial properties moving forward. Another thing you see that is going to wildly affect commercial real estate prices is mail order products, retail. Like, you don't need to go to a store and buy products anymore. You know, you don't need to. You just don't need to. Technology has evolved past that to where instead of having to drive to a Dollar General or a dollar store or wherever, you can now buy the product online, get it shipped to your house same day or next day very easily. You don't have to spend gas. You don't have to get on the road. You don't have to go do all this stuff. And a lot of the time it's cheaper as well. And so that's going to negatively impact commercial over time as well. I think in commercial real estate, we're going to see corrections, you know, and I think it's inevitable. I think it's going to happen. As technology grows, and the convenience factor of getting things shipped to you gets higher and higher and higher, commercial real estate is going to correct, and that's okay. I think that's all right. We don't need commercial real estate like that anymore, and I think you're always going to have some businesses that need it, and sure, but other businesses are simply not going to need commercial anymore. Still have to go to an office twice a week, right? But again, in general, you know, it's gonna continue. Yeah, I saw somebody post some real estate properties from Japan. The nuance of it was interesting though. Like, people said that you could buy properties in Japan, but there's a lot of things. They said that, like, sometimes they said they're not the most friendly to outsiders. And so, you know, also that a lot of the houses that are for sale for very, very cheap overseas are going to be houses that are going to be really, really expensive to renovate. So you're going to have to buy them and then do massive renovations for them. Yeah, it's going to cost more money. Like, I saw a really cool property there for like $8,000, and I was like, what? And then I looked more into it, and people in the comments were explaining that it's not as, like, it might seem ideal, but it's not, you know, basically. And that made sense. All right, so we're going to summarize the commercial real estate market from today, or from the pandemic to today. The commercial real estate market has experienced significant volatility from after the pandemic. Initially, the market faced a severe downturn as lockdowns and social distancing measures led to closures of retail, offices, and commercial properties. Vacancy rates went up, rental income went down, particularly in urban areas. In 2021, the market did begin to recover. The recovery was uneven. Industrial properties such as warehouses and distribution centers thrived due to the e-commerce boom. Conversely, office spaces struggled with the rise of remote work, leading to a persistently high vacancy rate, right? So this is the commercial properties over the last 3-4 years. The recovery continued into 2022, driven by pent-up demand and economic stimulus. However, challenges remained. Retail properties faced competition from online shopping, and hotels dealt with the fluctuating travel restrictions as well as the competitive Airbnb market. Entering last year and this year specifically, the market faced new pressures from rising rates and economic uncertainty. High borrowing costs and inflation affected property values and investment returns. Additionally, the potential crisis in the commercial real estate sector emerged, raising concerns about defaults and financial stability. So, yeah, that's the commercial space. Needs a correction. I agree. Real estate can deal with a correction. People acting like we always need some type of super thriving real estate market are ridiculous. You know, again, most of the time their business relates around real estate, and so because they want their business to thrive, they want real estate to always go up. The problem is, again, and this has to do with me, right? Like, I bought this house in 2021 at the peak of the market. I bought this house, right? And so what a real estate corrections means for me is that the prices in the house I'm currently in will probably correct. You know, the prices in the house I'm in will probably go down a little bit, and that's all right. I don't mind paying less assessed value taxes. I really don't mind, honestly. And anybody that owns their house is going to recognize that benefit, that short-term benefit. Because long-term, it's going to appreciate. But short-term, paying less taxes because of lower assessed value makes sense. It simply makes sense. The other problem is that prices have gone up a lot. They've gone up dramatically. Again, if we look at All right, so I'm going to ask it to give me a price graph. $300% GDP. Yeah. Yeah, so again, here is residential real estate prices over the past, this is since 2019. All right, so this is since 2019. This is residential. Let's see if it'll let me open this chart. It does. Okay, so this is residential real estate properties since 2019. All right, one thing that you'll see specifically is that they're up 60% from 2019. 60% gains in real estate prices since 2019. So what that means, chat, and what that means is that if you bought a property, let's do the math here. All right, so let's do the math here. Say you buy a property right now, and let's say your property was worth, what's the average home price? 400K? All right, so let's say you buy a property and it's worth 400K. That means today it is worth $640,000. 640K. You bought a house for 400K, it's worth 640 right now. That is unreasonable increases in price. And so, of course, everybody that bought a house is sitting there saying, oh, we can't let the real estate market correct. I get it. But you got to understand, this gain was unreasonable to begin with. You know, the only thing lowering rates is going to do is make everything worse. And so it's not time. Like, the real estate market needs to be restricted a little bit, I think. No? And again, that means that my current house is going to be worth less, but I'm also going to pay less in property taxes. So, you know. Yeah, so again, I'm looking at, where's Bitcoin at? What's Bitcoin done this morning? Bitcoin's sitting at 67. Honestly, I wanted to add more to Bitcoin here at like the 50s. I just didn't. I should have, honestly, because we're right back up to close to the highs with Bitcoin again, and it looks like it's going to make another test. Who knows, though? Bitcoin has been very consistent over the last 6 months or so. It's gone up and down and up and down and up and down. Very, very consistent. So bought my home at 131 in 2020. I got a deal though, since I was renting it. The home is worth $320 now, but I've done work on it. Nice, Daphne. That's great. That's great. Yeah. So you're up over 100%. It's awesome. But again, like I said, with that said, prices are not going to go all the way back down to what they were, and so you're always going to like retain some appreciation. It's more important that we just get a reasonable correction there. It's necessary. Same thing with, like, again, I've gone over this a lot the last couple weeks, but it's important for people to really understand this because, again, you get lenders and banks specifically try to act like, you get lenders and banks trying to act like lowering interest rates is going to somehow help people. You know, and again, I think that's a misconception. Lowering interest rates is going to make things worse. It's going to make prices go up, not down. And that's a problem right now with prices going up as much as they have. You're always going to retain some appreciation, though, so I wouldn't worry about it that too much. But who knows? You never know. But lowering prices right now is going to lowering interest rates is going to make prices spike. And again, that's bad. That's going to hurt the average Joe, not help them. You know, like it's pros and cons if I'm being completely objective and honest about it. Like, the benefit of lowering rates obviously is that more people are going to be able to buy homes. Interest rates are going to be low. More people are going to take out loans. It's going to stimulate the economy in that way. And if the economy was at some really brutal stance right now, like a really brutal economic situation, then that would be a different argument. You know, then I would probably argue for rate cuts. But the economy currently isn't. The economy's fine right now. It's not terrible. It's not great. It's not perfect. But it's certainly not facing some massive recession or depression, despite what any political arguments say. And so with that, let's keep interest rates high for as long as we can. You know, yeah. A lot of people on the verge of losing homes. For what reason? Like, why are they losing homes, William? Explain that, please. I mean, I know why. I'm just curious if anybody else does. Like, people are on the verge of losing homes because they got themselves in a really bad, like, financial spot. You know, to be honest, if people chose to get a freaking 7, 8, 9% interest rates and they couldn't afford it, they're going to lose their homes. And I'm not saying that's a good thing, but that's what happens. How are you so convinced that the economy is doing good? Listen, I'm going to clarify, Quentin. I don't think the economy's rosy right now. Perfect. The real problem is that prices are simply too high, right? Like, prices have gone up dramatically over the last 5 years. Inflation has made everything much more expensive than it was 5 years ago, right? I'm not saying the economy is good. What I'm saying right now is that the labor market is strong, GDP is growing, and people are still working and spending. Right? Like, the reason you would historically cut rates is if something was breaking in the economy, not with high prices, right? Like we're currently in. If GDP was almost negative, that would be an argument for it. If labor market was weak, that would be an argument for it. If Jolt's report came in super low, that would be an argument for it, right? Signaling weak labor markets, right? That's not what we see right now. The labor market specifically, I'm not saying the economy's perfect. The labor market is strong right now. That's not an argument to cut rates. Again, if we cut rates too early, prices are going to spike. And if they spike up another 10%, people are genuinely going to be unhappy, like really going to be unhappy. What really happened is that everybody profited massively from this real estate appreciation from prices going up. And so and it's an election year, and so the Fed's going to be getting pressure to cut interest rates to make the economy look good, right? Like, it makes sense. If it's an election year, they want the economy to thrive. How do you make the economy thrive? You cut interest rates. But there's a cost to that. Like, people, and again, it's all love here. Like, we can agree to disagree on anything I say, and it's all good. What I'm trying to say is that people hear me say we shouldn't cut rates, right? And people are, like, the real reason people are unhappy is because inflation has gone up and spiked prices over the past 5 years, and people are paying much more now versus what they were in, like, 2019. They're paying much more right now. That's the real reason people are, like, unhappy. That's the real reason people are struggling, is because prices have gone up so much. And so what's going to make prices worse? Cutting interest rates is going to make prices worse. You know, it's a very obvious thing. Well, the labor market's good right now, but it's not like labor market's good because prices have gone up so much. People have to work a lot of jobs to afford things, right? Which is another argument on high prices being too high and us needing to keep interest rates high. You know, again, if we cut interest rates, it's going to make that problem worse. If people are already having to work multiple jobs just to be able to afford things, what do you think is going to happen when interest rates go down, right? What do you think is going to happen to prices? Prices are going to obviously spike, and people are going to have to work more jobs. You know, the labor market's going to be even more thriving in that regard because people are going to have to work more jobs because prices are going to be up unreasonable amounts, you know. Yeah, I mean, I'm not super political hard hat. None of, like, again, I'm very neutral politically. And we did have big political news. Obviously, the current administration saying they're not going to run for re-election. That I think the market's gapping up on this news, I guess. But yeah, you can see the SPY up, Tesla up, nvidia gapping up on this news. And again, I'm not really political. I'm not really picking sides here. But I think for that side, this is the right decision, of course. I think if they would have let him continue to run, they were obviously going to lose just based off of the debate and all that stuff, right? And again, I'm very neutral. I'm not picking sides. I dislike both sides, so it doesn't really matter to me. I'm just going to cover it news-wise, but yeah. Would you say high inflation is a product of a bad economy? I think high inflation is the product of the pandemic, you know, and the money printing that had to happen because of the pandemic. You know, again, I talked about this last week, but to put this into perspective, chat, like, the pandemic, like, it's not like any politician could really avoid the pandemic, you know. Like, what happened in 2020 was some crazy thing that happened, right? And the only thing everybody else can do is react to it. And so, you know, you might judge their reactions good or bad, and that's arguable. But, you know, the pandemic happened, the labor market tanked, people stopped working, people stopped spending, the economy was going towards a recession and maybe even a depression. And so what they had to do, and again, if they didn't print money and lower interest rates, people would be arguing that what are we paying these guys for? Like they would argue against that too. They would be complaining about that as well. And so, they had to step in and do quantitative easing, which is, again, creating bank reserves, a form of money printing where they create bank reserves and they use those bank reserves to buy up financial assets like bonds and stuff like that. And this injects liquidity into those markets, and ultimately banks lower interest rates because of it. They also cut the federal funds rate. They also send out stimulus checks. All of these things was the Federal Reserve trying to avoid a recession or worse, right? And so, but the consequence of that increased spending and liquidity is what? It's inflation. Inflation spiked because of that increased spending. There's a cost to stimulating the economy in that way, and it's inflation, And so, again, if we try to cut rates now and stimulate the economy in that way, there's a cost to it, and the cost is inflation, All right, guys. Host, I think you're a smart guy, I do, but I'm surprised you go on gov numbers, which we all know. Yeah, I mean, look, I'm not saying they're not influenced or manipulated in any way, but I think that's a tale as old as time. I don't think. I think they're somewhat true. I guess is the point. They might be influenced and manipulated, but I think they're somewhat true. And I think a lot of people get a lot of pressure. Like, again, you have to understand the state of election years. During election years, what happens, right? And again, this is coming from somebody very neutral politically. I'm not against you. I'm probably not for you either. I'm somewhere in the middle. Right? But during election years, what happens? We get one side that tries to say it's the worst it's ever been because they want their side to get elected, right? You got the other side trying to say it's the greatest it's ever been because they want their side to get elected, right? The truth is usually somewhere in the middle. And one of the things that's incredibly consistent during election years is that we typically get really good stock market action. If you look at the stock market this year on an election year, 2024, regardless of who's in power, who wins, typically we get very good, consistently appreciative stock market action during election years. If you look at what we've gone, again, the S&P was at, or the SPY was at 460s. We're now at 550s. Very big increase this year in 2024. And so that's one of the most consistent parts about it. Outside of that, who's good, bad, right, wrong, I'm not going to get into any of that, but yeah. Oh, let me do the poll here. I got you guys. A little bit late today. All right. So, this quarter's earnings season have a bullish or bearish impact on financial markets? This is a good question, right? Bull, bear. I don't know. See results. Vote on that poll. Let me know how you feel, guys. Yeah, I mean, creative, maybe you're right. Looking at history, though, historically, interest rate cuts tend to increase home prices. Lower mortgage rates typically lead to lower Borrowing costs for home buyers, making home loans more affordable. Increased demand happens with lower rates. With cheaper borrowing costs, more people are able to qualify for mortgages and afford higher priced homes. This increases the demand for homes and can push prices up. Refinancing and spending. Existing homeowners often take advantage of lower rates to refinance, freeing up disposable income. It can increase consumer spending and overall economic activity, further supporting home prices. Lower interest rates can make real estate investments more attractive as well to other investments relative to other investments like bonds, which typically offer lower returns in low-rate environments. Rate cuts are often part of a broader effort to stimulate the economy, improve economic conditions, generally support stronger housing markets. Now, again, with this instance specifically, maybe you're right. I don't know. But I know typically rate cuts will increase home prices. And I think it's a very obvious correlation. I mean, you could argue that somehow rate cuts are going to bring prices down in real estate, but I think that's, I think that's less likely, of course. And I think it makes perfect sense why rate cuts would cause prices to go up. People are going to, like exactly what I just said. I think the biggest one is that with cheaper borrowing costs, more people are able to qualify for mortgages and afford higher price homes, and so that's going to bring prices up. More buying equals higher prices. And I think that's been very true historically, Yeah, maybe. Maybe this time it's different. I don't know. I don't think that's very probable, but, we'll see. All right, guys. So, here's the SPY. Vote on the poll here. 70% of people are bullish. 22% of people are bearish. 7% say, I don't know. You're not taking into account all the people who stayed in locked in lower rates that wanted to move. Right. I mean, that's true. I understand that. But, again, all the people wanting to move, people that are able to get lower rates and move, what do you think they're going to do? Creative. They're going to go buy. Why do you think they want to move, right? They want to move because they want a nicer home a lot of the time, right? So what do you think that's going to do? It's going to cause home prices to increase, most likely. Maybe not, but let's look this up. All right, so after the 2008 financial crisis that began in 2007, this period saw a dramatic decline in home prices despite significant cuts by the Fed, right? So, but again, I think you have to look at 2008 objectively here. So, like, prices were dropping not because of rate cuts, right? They were dropping because of weakness in mortgages, right? The whole reason the market crashed in 2008 was because of mortgages and the mortgage disaster with everything that happened with mortgage-backed securities in 2008, basically, essentially what it was a scandal where the rating agencies were giving terrible mortgage-backed securities high ratings, and people were buying those because they thought they were safe, but really they had a bunch of crap in them. And eventually those mortgages went into default, and those securities crashed, and it in turn crashed everything. But again, in that situation, the market was going down. Like, in that situation, rate cuts are not the reason the market went down. Like, the mortgage market went down. The reason the mortgage market went down was because of this disaster that happened. So again, I guess the point is, rate cuts in that situation happened, and prices of real estate went down. But correlation doesn't equal causation in this instance, if that makes sense, right? Like, yes, real estate prices went down, but it wasn't from specifically rate cuts. I'm sure it'll affect both, Blaze. I'm just looking at historically. Prices typically go up with more buying in properties. Like buyers markets or sellers markets typically make prices go up, not down. When there's, I mean, who knows? What happens to banks if home loans go into a default, John? Well, I mean, banks typically benefit in a lot of ways, William. They end up taking the property and keeping the money paid and all that stuff. So, I mean, it can go either way, right? So the purchasing power of $100 from 1900 is roughly 2.77% in 2023. This means that $100 today has about 2.7% of the purchasing power it had in 1900. Conversely, $100 in 1900 would be needed to have about $3,630 in buying power today to maintain the same purchasing power. Right, but that's not a shock, though. 1900 was 130 years ago. Like, of course, of course, $100 is going to be much more money to them at the time versus today. This is 130 years ago, 120 something years ago. So, I mean, yeah, not a shock, All right, guys. All right, SPY at 552s. 552s. All right, chat. SPY still getting close to highs here. Getting close to highs. Do you ever see any indicators that a company will decide to split a stock? I mean, the real reason companies decide to split stocks is because they're going up so much, right? So the biggest indicator of a split incoming is a blue chip healthy company that the price has been rising and rising and rising and rising, right? And eventually the company's going to say, hey, if it starts to get up to like 1K, or something like that, that is a little bit more of an indication that the company's going to start to split. And so then they do like a 10-to-1 or a 1 for 10 split, or a 10-to-1 split, or no, 1 to 10. I always get mixed up saying this, but the point is they split it once the price gets too high. So once the price goes up, like companies, like a good example is Chipotle. Chipotle recently did a 50-to-1 split. Prior to this, they were freaking thousands and thousands of dollars a share. I think it was a 50-to-1, right? But again, it got to a point where one share of Chipotle was just an unreasonably priced thousands of dollars. And so what happens, the company says, hey, this is up too much. Like, let's change the structure of our shares so that our shares become more affordable, so that people don't need $1,000+ to afford a Chipotle share. I wasn't an investor in Chipotle, so I can't remember the exact price, but yeah. All right, there's Apple. Apple at 226. There's the SPY. There's nvidia. Yeah, I'm probably gonna hold Palantir. I mean, we're green today somehow, mostly specifically from Nike, MU, Google, Treasury bill, Tesla, all green. Snow is green, which is nice. Nike, MU, very green. Google. Why hasn't Berkshire Hathaway split their shares? Well, Berkshire's a little bit different of a company. They've got all these different shares and stuff. Yeah, they're just a little bit different of a company. I'm not sure, Yeah. CrowdStrike and snow dropping. Yeah. Well, CrowdStrike is down a lot. Still, I made some money on CrowdStrike when it dropped, but for now, I don't know what I'm gonna do with it. I mean, I'm not in it anymore, just to clarify. But my dip buy at the bottom was a nice dip. Who knows what it's gonna do now? What about Amazon? Yeah, Amazon did a split not that long ago. It's only at $185 a share now. So, I mean, I definitely like Amazon as a company. I think Amazon is one of those companies that are obviously going to be successful, like really successful long term. All right, guys. So yeah, SPY moving up. Let's see if we got any other stock market news today. It's getting close, but what do you guys think the market does? Go up, down, or sideways here? We're slightly green on portfolio today. I'll take it. Let's see other big stories of the day. We had yeah, so Tesla, Google earnings this week. Investors are waiting. It's going to provide insight into performance of tech. SunPower stock plunged. SunPower stock is down 73% over the past week as the company paused its operations. Analysts from Guggenheim have described this as a wind down process, significantly impacting investor confidence in the residual solar sector. What's SunPower? Is it S&PW? What's SunPower? SPWR. Yeah, I mean, look at this. SunPower stock. You know, I remember people were so heavily invested in this. This is a scary drop. You know, again, the big reason, guys, like, look, I talk about this all the time, but SunPower coming down is a perfect example of be careful what you invest in. All right. The reason you need to be careful, and I say this over and over again, the reason you need to be careful is because people invest into mid-cap, like newer companies like they would in Amazon, Apple, Google, Walmart, stuff like that. And they're not the same. The risk level that you get investing into a company like this that is still relatively new, like relatively new. You know, this company has only been IPO'd since 2006, right? It's still a relatively new company. The risk that you get investing into these kind of mid-cap stocks is much higher than Amazon, Apple, Walmart, whatever. Why? Because it's lesser of a known company. It's a smaller company, and so the risk in smaller companies goes up, but people invest in them like it's their life savings invested into these companies, and these companies can drop massively. Of course, this one went from $55 a share back in 2021 all the way down to 67 cents right now. So there's massive risks, and again, this company's starting to quote unquote wind down. It essentially paused its operations. I guess the point I'm trying to make is, look, if you invest long term in a company, the smartest move is to invest in legacy companies, well-known companies that have been around a long time and that you've heard of. If you decide to invest large amounts of money into mid-cap companies that are not as established, that have not been around as long of a time, that you don't know as much as some of these big boy companies, the risk is obviously there. They can drop 50, 60, 70% in a year. You know, they can drop more than that, obviously, if you look at SunPower. And so just be careful, be smart, understand what this is, you know, which is a big risk, big reward. Like, you might make money, but you could also lose a ton of money, and SunPower is a good example of it. Quarters earnings from where, bro? Yeah, you just have to be careful. I'd say downshift is always taken, but I'm not sure of the correlation. I'm right at the moment. Yeah. Biggest problem here is CrowdStrike issue is a more manual fix, and they have to go in and delete. Yeah. Thanks for responding earlier. I feel more people buy Nike and Amazon than, say, Apple or Tesla. Why is Nike and Amazon share price lower? Well, JD, number one, what you said is not necessarily true about more people buying Nike versus Apple or Tesla. Apple is one of the largest companies in the world. And so the amount of people that buy Apple is very, very, very high, despite what the news is going to tell you, right? Apple is one of the strongest companies in the world. Definitely more so over Nike specifically. I'm not saying Nike's bad, but Apple is much larger of a company than Nike. And so in that regard, it has much more people buying their shares than Nike. Amazon's a little bit different. Apple's still a larger company than Amazon as well, but it's a little bit more competitive in that way. Still, though, the fun, like what you seem to be missing here, JD, is that just because a stock share price is higher does not mean it's a more valuable company. Like prior to Chipotle's split, Chipotle was thousands of dollars a share, right? Does that mean Chipotle is 10 times larger than Apple? Of course not. Does that mean Chipotle is a bigger company than Apple? Of course not. It has to do with how many shares are out there. So if a company like here, let me look at this. So Apple has a float size of sorry, I'm trying to use AI, but it's just slow to freaking. All right, I want to know what the float is of Apple. All right, so yeah, Apple currently has a float size of 15.3 billion shares, meaning Apple has 15 billion plus shares out there. The amount of shares that are in Nike's float are much, much lower, I would assume, right? So the amount of shares that are in Nike's float is 1.19 billion shares, right? So Nike has 1.19 billion, less than 2 billion shares in the float. Apple has 15 billion plus, over 15 billion, 15.31 billion. So 15 billion, 300 million plus shares in Apple's float. And so that's what you have to take into consideration when you're looking at float size and all that stuff and company size. Yeah, you got to look at you got to look at market cap, which is the amount of shares out there multiplied by the share price, which gives you the overall value of the company. Yeah, so again, CrowdStrike, we're looking at it. We're at 290.70s. Gotta look at market cap, yeah, for sure. Apple never dropped below the first level of 224. All right, guys. Yeah, so if you divide, so we have Chuck sitting here asking a question. He said, so if I divide share price at the cap, you should come up with the float. Correct. Yes. So if you divide, let me do it with Apple real quick. If you divide 3.44 trillion, which is Apple's market cap, it's how much Apple is worth, 3.44 trillion, and you divide it by 227, which is Apple's share price, you get about 15 billion plus shares, right? So yes, roughly, approximately, it's approximate. Apple, with that said, is ripping over highs here, chat. So Apple is moving up big. Yeah, looking at chip stocks as well, like AMD. AMD is gapping up a little bit. There's the SPY. We can also look at Tesla stock. Tesla has earnings this week. It's a big week for earnings. It's at 242.60s here for Tesla, 242.60s. So Tesla's moving here, chat. No patch rollout. Today is massive news because the big news that happened over the weekend that is influencing the stock market today is the current administration saying they're not going to run for re-election, right? That is huge news. That is wildly influencing the market. If you look at most tech stocks, the SPY, everything's up big, you know. Look at the SPY. SPY is up from 548s all the way to 552s. Apple's breaking highs. Tesla's up there. Nvidia is up there as well. So I think Tesla drops more into earnings. Yeah, Tesla earnings tomorrow is huge. Apple breaking highs again. You can see it. Nvidia up there to 120s. Tesla, big story today is Tesla earnings tomorrow. Same thing with Google. Google drops their earnings tomorrow as well. So does Tesla have good or bad earnings? We did a poll here already. So the poll we asked here was, does this quarter's earnings season have a bullish or bearish impact on financial markets? 68% said bullish impact, 19% said bearish, 13% said I don't know. Apple earnings are much later. I think Apple earnings are next Thursday, I think is when it is. If I look at, I think it's next Thursday, I believe the 1st is when Apple earnings are. Yeah, so Apple earnings are, yes. So Apple, this is probably the biggest earnings day of the season, which is next Thursday, the 1st of August. The big earnings that drop are Apple, Amazon, Intel, Coinbase, Block, DraftKings, Roku, Marathon, Snapchat, Booking, Twilio, a bunch of other ones, DoorDash, GoDaddy, Ring, Rocket Companies, U.S. Steel, Clorox, a bunch of other big earnings come out. Corsair. So yeah, that's one of the biggest days is next Tuesday. Or next Thursday, I mean. Tomorrow is a big day too, is Tesla earnings. Yeah, so I'm going to do a Tesla live stream tomorrow. Tomorrow afternoon is when Tesla. We also have Google earnings as well. I might try to cover both, but we'll see. Yeah. So yeah, I might have to cover both, but we'll see. Yeah, so again, look at Tesla up to 243s, SPY up to 552. So Tesla breaking highs of pre-market maybe here right now. Let's see if it does. Again, everything's basically up after the news that the current administration is going to step down and not run for re-election. What this means for the economy and the market, and I'm not saying anything, but markets are reacting positively to it. So markets are going up. My portfolio is green too, although my portfolio was, yeah. All right, guys. There's Tesla breaking the pre-market high. So Tesla just broke over the pre-market high, chat. It's up. Let's see what happens. You guys ready? Look at Tesla breaking highs. All right, guys. All right, look at Tesla up there. Tesla over the highs at 243s, chat, 243s. Apple up too, yeah. Politics aside, it's probably best to not have a seat. Yeah, I'm not supposed to speak about politics. Thank you, John. You the fam. Hey, what's up, Tiny? Hope you're doing good. Stay green, stay groovy. Most of all, stay safe. Yeah, y'all as well. Yeah, we're going to stream Tesla earnings for sure. It's a big week, honestly, this week. The first half of this week is slow, except for earnings. But earnings are going to be super influential, super big. So, yeah, earnings is this, you know, it's just going to be a big week. Major stuff. Look at Tesla still pumping up. It's at 243s. 243s. And again, I'm very neutral politically, you know. We'll see if we get anything good this week. Yeah, so again, I'm trying to check. So we do have the FOMC meeting coming out next week too. So next week we got the FOMC meeting. You know, they've been designing it a little bit differently relative to how they usually do it, where it's like, it's been kind of a... Hey, thank you, chat. Appreciate it. Like, typically, you know, we have stuff to cover every week. They've been designing it where they have, like... So an example is next week, right? Next week, Tuesday, we got the Jones report. Wednesday, we got the FOMC decision and ADP non-farm employment and Chicago PMI. Thursday, we got jobless claims, ISM manufacturing. So economic data springs up next week. It's been one of the slow weeks. Every quarter, we have like a very slow couple week period. And that's been for like the last 2.5 weeks, right? Where it's not earnings season. The FOMC meeting is passed. You know, we just have this like kind of break. That ends on... That ends this week, starting Thursday and Friday, but also really tomorrow. Tomorrow with Tesla earnings are big. Tesla is expecting. Let me show you guys this. So here's Tesla, right? Let's take a look at their EPS and their revenue graphs for Tesla, just to kind of get an idea on what might potentially happen here. So here's Tesla, right? So here's Tesla. Tesla EPS specifically shot up here in last quarter, in 12/31 quarter. But this past quarter was very low at 34 cents. 34 cents. This earnings season next week, or tomorrow, I mean, they are expecting... We got some earnings that dropped today, but tomorrow they are expecting... Tesla is expecting 59 cents a share. 59 cents a share. So, like, they are expecting to look like this, basically. So, 34, 53, yeah. So, they're expecting to look like this. That is what they're expecting here. So in terms of their graphs, like here's their last few years, like their last 5 years of graphs. In terms of their graph, it's going to look a little bit better, a little bit more increase, but it's still a relatively low EPS. Like Google, as an example here, Google also drops tomorrow. They are expecting a $1.84 earnings per share. So looking at their revenue. So let's take a look at Tesla revenue graph. So here's Tesla's revenue specifically here. Now, their revenue has always been pretty good, but they have seen a slump over the last quarter. You know, their revenue was going higher and higher, but they did see a slump tomorrow they're expecting another benefit from this, though. So tomorrow they're expecting this here. They're expecting almost 25. So they're basically expecting this tomorrow. So they're expecting the revenue to come in here. Now, if it comes in over this, right, it could be their largest revenue quarter ever. It's still right on the cusp of that, where it could be their largest revenue quarter ever, is what they're expecting. They come in over, you know, over 26 billion a share, which is pretty unlikely. They're expecting 24.97 billion. If they come in over 25 billion, it could be one of their largest quarters ever. Their largest quarter prior to this was this quarter right here, where they came in at 25.16. And so it is possible that they have their largest revenue quarter as well. But, you know, I wouldn't say it's super probable. But with that said, Tesla now moving up in pre-market, moving up. Somebody saying I sense a calm and widespread bullishness. Yeah, we'll see. We'll see. So Humble Trader had over 1 million subs. Yeah, I mean, you know how easy it is for females to grow in the trading space. You know, it's so male dominated that any girl can basically grow very, very quickly on YouTube as a trader, because there's so few of them. You know. Yeah, I mean, I'm liking this current market. We're up a lot today in our portfolio. Yeah, I'm waiting for my T-bill trade to pay dividends. Again, I'm holding, you know, about $70,000 worth of T-bills here, treasury bills, because I got this money sitting in my account. My account's got well over 100K in it, and so me spending this much on T-bills is not a crazy thing. We're in Tesla as well. Tesla's going up. You know, again, if you look at the long-term range of this thing, right, let me put up a weekly chart. We got one more good week, and then it's going to come right back down. The problem is, like, the dividend paying week is when it comes back down, and then it moves back up, pays dividends, comes back down, moves back up. So this should pay me, again, like, let me see, just in terms of interest. They say this pays about 5.5% annually in interest. So let's see, 49. Let me see how much. I could actually look to see exactly how much. So it says I'm spending 50K. But I guess that's just from profit, but that doesn't make sense. So again, we're holding 1,400 shares of something that is 49.96285. All right, so that would be about 70K times 0.053. I think it paid out 5.3%. This is the math here, guys. So this would pay me about $4,000 a year divided by 12. So it's going to pay me a little bit over $300 monthly for this position. That's just kind of sitting here. So I might as well get paid by it, right? I'm just trying to show you guys how much I'm making in this position. Tesla missed earnings the last 3 quarters. Will probably happen again. Really? You think it'll miss? I don't know. Ethereum's ETF this week in major central banks. Yeah, I mean, honestly, nvidia is up to 120.50s. So nvidia is up. Tesla is up. The whole market is up, basically, after the political news that happened over the weekend. Half the chat is one guy spamming nonsense. Who? Whose chat? Mine or somebody else's? Guidance will be what matters. Yeah, for sure. As always, guidance is going to be the more impactful, influential thing for sure. All right, we're at 244s for Tesla, 244s. Let's see if we continue here. Tesla shooting up here, chat. Look at Tesla move here. It's going up. It's going up big. Will Tesla continue to rise here, guys? Again, it's at 244s. 244s. Yeah, so I'm looking at guidance. We got guidance numbers tomorrow for Yeah, will Tesla continue going up? Again, it's at 244s roughly here. I'm going to put the SPY back up here as well. Yeah, so they're again, Carol's gonna step in for me for a second and talk about Cybertrucks and Tesla. All right.
Morning, everyone. How's everyone doing? Yeah, the Cybertrucks. Yeah, I didn't really like them at first, like when I saw pictures of them. And then, I guess probably a few months ago, I started seeing one, and then I saw another, and like now I see one maybe every other day where we are. But seeing them up in person is definitely different than seeing them in the picture. When I saw it in person, I was kind of like, okay, I get it, you know. I get why everyone maybe wants one, especially if it's bulletproof. Can y'all hear me? So, yeah, I like them now. I didn't like them before, but I like them now. So, although I have seen that apparently, like if they get stuck in the mud or in the snow, they struggle. It's not like a pickup truck that can kind of get its way out. Can y'all hear me? I'm not sure what's going on with the volume. Sorry, guys. The black matte. I wonder too about with the matte colors. I wonder how they hold up like through the years. If you have a matte car, I guess if someone has a matte car that they've had for a while, how does your paint hold up? Does it still look nice, or like, you know, after a few years you get like when you bring your car through the car wash and it kind of does these little micro scratches? How does that hold up on the matte, you know? Yeah, I've seen a lot about that, about Cybertrucks getting stuck in either the mud or in the snow, and then they have to have like another regular pickup truck pull them out. I'm pretty close to the mic. I'm not sure what's not working here. Y'all could hear me? So bird poop used to ruin the original BMW matte paint. That's interesting. Okay, good. Y'all can hear me now. I don't know what happened. But yeah, I think initially, like I said, I didn't like them when I saw pictures of the Cybertruck, but now I do. Apparently they couldn't hear me for a period. There was a volume issue, so.
Yeah, you gotta speak into the mic. Here, it's all right.
All right, guys. Good luck today. Hope everyone's well. John is just loud. No kidding.
Yeah. Yeah, I've just been doing this for long enough where I'm just naturally loud, I think. I'm just used to running the stream. That's probably true.
All right, good luck. I'll see you.
Yeah. Yeah, I'm just loud. All right, I'm back. Yeah, Carol originally hated the Cybertruck. Now she likes it. Every time we see one, she's like, ooh, it's all. Maybe we'll get a Cybertruck eventually. I don't know. Well, waste is subjective, you know. Honestly, look at Tesla go up to 240s. Honestly, everything's kind of pushing up here. Here's the SPY. So SPY had a big red week last week, but the long-term trend's still pretty good. It's up to almost 553s. Is it time to buy CRWD on a dip? I don't know, man. CRWD at 290s. Why what? Top 3 loudest people in the world right now for sure. Definitely top 3. Yeah, I'm gonna try something today when we switch over to the day trading stream like we've been doing, and that's kind of worked, you know. Kind of gives us something else to cover. Let's see what else we got. All right, guys. Your top 3 at every top 3. 20K in NASDAQ again today. I might imagine. 100% organic stream. What? Everybody get it. New records highs today. 6th generation farmer here. Stocks on the side. No place. I mean, for what reason, Dustin? So Dustin says, 6th generation farmer here, stocks on the side, no place for Tesla in the country, simply doesn't work on all levels. Explain. It's all good. I'm listening, Dustin, but explain it, brother. It's all good. Again, we can agree to disagree in a lot of areas too, so it's all good. You know. I think it's a good conversation to have, regardless, right? Like, I think it's a good conversation to have. What's loud? Am I loud? Hold on. I'm supposed to be loud, chat. CFD prediction for NVIDIA. What do you mean CFD? I'll keep a modified Land Rover Discoverer. I like the new Predators. The Predators are pretty dope looking. I do like those, right? So there's some cool stuff. It just depends, man. Like, there's a lot of... Oh, I forgot to monetize my stream today, chat. Oops. My fault. We're going to get ready to day trade here, but yeah, that's mostly the pre-market news. I'm going to tell a story today as well. So I'm going to tell a story today also. Isn't there a way where... All right, so Tesla up to 244s. We're going to tell the story today, a funny story. We're going to try to do these stock market stories pretty much regularly. All right, so for all those that didn't grow up in the 90s, we're going to get ready to tell the story of the rise and fall of Blockbuster. It's actually a very similar story to Netscape. So stick around, guys. So yeah, we're gonna do the rise and fall of Blockbuster, right? If you haven't heard this story, it's actually a really interesting story. A very similar story to Netscape, and there's a lot of correlations in business with these specific stories about the rise and fall of these big tech companies. They're kind of lore and market history. All right, so Blockbuster, if you didn't grow up in the 90s, Blockbuster was a video rental service. You would go to Blockbuster. It was very fun to go to these stores, rent movies, come home, watch the movies. You could return the movies, rent out and select other ones, so forth and so on. And that was really popular in the 90s. Everybody kind of went there on date nights. You'd go out on a date with somebody. I remember doing this with girlfriends that I had, where I would go to Blockbuster. We'd pick out a movie, get some candy, some popcorn, go home, eat the candy, eat the popcorn, watch the movie. It was a time. But anyways, with that said, Blockbuster founded in 1985 by David Cook. By the 90s, it was thriving, but by the 2000 time period, where we hit the 2000s, it was struggling. The reason it started to struggle in like the early 2000s is because more and more people stopped using VHS. They started using DVDs, and over that, the internet got really big in the 2000s, ultimately impacting the VHS movie market, the DVD movie market. Eventually streaming became a thing, but that was much later on. Anyways, Blockbuster, founded in 85. By the 90s, it was thriving. It was making tons of money. At its peak, it had over 9,000 stores worldwide. In 2000, Netflix was a company that would do the very similar thing to Blockbuster, but they would mail order the movies. So they would send you movies, and you could rent the movies through the mail, basically. They would send you DVDs. You could watch the DVDs and return it through the mail and pick out another one and then rinse and repeat that. And it was cool. It was kind of one of the first mail order rental services that they had, right? Well, anyways, Netflix co-founder Reed Hastings approached Blockbuster and proposed that Blockbuster buy out Netflix for $50 million, right? So this is actually a true story. They proposed that Blockbuster buy out Netflix for $50 million. They suggested a partnership where Netflix handled online rentals and Blockbuster promoted Netflix in stores. The CEO of Blockbuster at the time was a guy named John Antioco, and executives in him basically dismissed this offer. Very similar to the Microsoft thing. They were so big at the time, they just felt like they didn't need Netflix. Netflix was a very simple mail order rental service, and Blockbuster had thousands and thousands of stores nationwide. And so why would they need Netflix? Why would they need to buy this small little video rental company that would just mail order the same things? They were thriving already. Anyways, they viewed Netflix's business model as insignificant and unsustainable. They thought that customers preferred in-store rentals over mail delivery. And obviously, fast forward 2010, Blockbuster files for Chapter 11 bankruptcy due to $1 billion in debt and competition. And almost 10 years after Blockbuster closed its remaining stores, Netflix created a show about the last standing Blockbuster online. And you can actually watch it. It's about the last Blockbuster online. But again, another bad business move, where a lot of this stems from older people who don't want to look at the future objectively in terms of technology growth and evolution, right? So they believe their business model is always going to be around, and it's not. And the lesson of this is that if you're not evolving as a business, you are failing as a business. So the lesson here is always evolve your business, always grow your business. If you're not evolving, you're failing. And I think, Netflix versus Blockbuster is a beautiful example of that. Obviously, I think one of the telling things was that, by the mid 2000s, it was very clear that physical rentals were going to go away, that they weren't going to be around. Once Netflix and all that stuff took off, Blockbuster should have pivoted, and they tried to, but it was too late. And so again, stay on the front of that is a really good example. Anyways, fun story, and yeah. I used to love renting games. Honestly, my parents, man, my mom used to bring me to Blockbuster, and All right, guys. So we do have. Yeah, I'm trying to look at. Oh, wait, that's the wrong one. All right, let me find this. Yeah, I'm trying to find something here. Comments. Isn't there a way to turn off? Whatever. Which company is the Blockbuster of today? Netflix is definitely the company. Yeah, Redbox, a very famous story as well. Redbox has its time. It basically replaced Blockbuster for a small period of time. Yeah, I'm trying to figure out, like, there's supposed to be a section where I can turn off, I'm going to turn off comments on this upcoming stream. There's supposed to be a section where I can turn off subscriber notifications on this other stream, because I don't want too many yeah, we want live chat. I guess we could do a live chat replay too. So look at Tesla up there. SPY now finally dipping down a little bit. So the SPY is coming down some. Yeah, I remember all those N64 games. I was a big video game player in the 90s and 2000s, right? Like, I started off with Sega was my first real system. I was a little bit past regular Nintendo. You know, like, I've had people that have met me and they try to, like, almost like personality mirror me, but they get it wrong, right? Like, I've had people that met me and they want something from me. A lot of the times, like, you'd be surprised at how many people meet me and then want to use me for the following that I have, even though the following's not crazy big or anything, but it's loyal and that's good. But they meet me, they want to use my following. I had one guy that wanted me to create an NFT for some type of chemical production plant, and he wanted me to sell that to you guys. And I was like, you know, not going to do it. Anyways, you'd be surprised at how many people actually, like, try to meet me and be all buddy-buddy with me, act like they're my best friend ever. And sometimes they even try to personality mirror me. But what they don't realize, like, is, like, I'm not a big Nintendo guy. I was always Xbox, Sega. Sega was always my game. Like, I love Sega. I played Mortal Kombat on Sega when it first came out. I had a Sega Saturn, too, believe it or not, the old Spider-Man game that came from that. And then after that, I had a PlayStation, but then I kind of felt bad because I loved Zelda. I loved, like, the Ocarina of Time and Majora's Mask. And so then I eventually got an N64, and then I went from the N64 to Xbox. And then I went from Xbox, and I stayed Xbox basically since then. Anyways, I've had people that try to personality mirror me, and, like, they essentially start to act like they're just like me, but they start getting really hyped about, like, Mario. And I like Mario, right? But I'm not, like, obsessed with Mario in that way, you know? Sega Dreamcast. Yeah, I always wanted a Dreamcast. I just never had one, unfortunately. It was too expensive at the time, and it was too hard. It was too much of a hard sell for my parents. Like, my parents didn't just buy me whatever. Like, I had to, again, like, my mom and dad, what they would make me do is I would buy a Sega. Like, and anytime I got a new system, I would have to sell the old system to somebody and basically take the money and swap it out for the new one. So I remember I got a Sega, and then by the time PlayStation came out, I had to sell my Sega online in the classified ads of a newspaper, you know. So I would sell my Sega online, And then whenever that would come out, whenever a new system would come out, I would sell my Sega. I would buy a PlayStation with the funds that I got from selling my Sega and all my games. And my parents might have helped me put up a little bit more money from it. And then I would play the PlayStation. And then I remember I wanted the N64 because I wanted to play Zelda, Ocarina of Time. And so I sold my PlayStation in classified ads and like bought up the N64 and Zelda and all that stuff. I remember I had like Perfect Dark when it first came out. I had GoldenEye, of course. Played all those games. Banjo-Kazooie. And then by the time Xbox came out, I think my parents didn't make me sell my old systems anymore. So I remember just getting an Xbox and playing NFL Fever. Big controllers on the regular Xbox. Huge controllers. And it was a fun time. It was a fun time. I've basically been on Xbox ever since. Although I did have a PS2 for a little while where I played Vice City. I did have a PS2 where I played Vice City. Great game, by the way. So yeah, that's kind of my history of video games. Yeah, Dreamcast was always the best one. Yeah, Ocarina of Time, arguably the best video game ever made, I would say. It's probably my favorite video game of all time. Was Zelda, Ocarina of Time. And Majora's Mask was good. Majora's Mask was good. The problem is that I had an emulator for Majora's Mask, I think. I think it was Majora's Mask that I had. And so I played Majora's Mask before it came out. Or maybe it was Pokemon that I did this with. I used to download emulators and ROMs off the internet. And I would download like the Pokemon games that were coming out before they were out. But the translations were always kind of bad. And so you didn't know if that's really what they were saying or whether the person that emulated the game and translated it from Japanese just kind of gave you a bad translation. And so I remember doing that a lot as a kid too. It's really kind of what turned me into a tech nerd as a kid. But yeah, I would basically download the Pokemon games before they were out in the US because they would come out in Japan first, but the translations were bad, and I would download them, play them on my computer, play through the whole game. And, again, I'm pretty sure the translations were pretty bad, but I would basically never buy a Pokemon game because of it. I had a bad experience playing it. Like, my bad experience was this. Okay. I had a Game Boy with the original Pokemon Red, Green, or no, it was Pokemon Red, Blue, or Yellow, I believe it was, right? I might be off here, but Red, Blue, or Yellow. Let me look this up. Yeah, it was originally red, blue, silver, and yellow. And so I had those games, right? But my Game Boy was broken. And the reason my Game Boy was broken is that it only worked when it was plugged in to the outlet, right? So, like, batteries wouldn't work in it. My Game Boy would only work if it was plugged into the outlet. And I remember it's the only Game Boy I had. Again, my mom didn't have a ton of money, right? So it was the only Game Boy I had. And I would sit there trying to play these Pokemon games. And I would play and play and play, and I'd get like 60% through the freaking game. It would take me hours and hours, and I would just leave it charged overnight. But if I unplugged it from the outlet, the whole thing would cut off, and I would lose any saved progress. It wouldn't save, right? So the whole thing would cut off. I'd lose any saved progress. And, dude, I remember I played like at least 20 hours, 10 hours of this game, 10, 15 hours of this game, sitting in my room. And then I accidentally unplugged it, and all of my progress in the game was just done, was just gone, and so I basically never played it on a Game Boy again. I would always just download the ROMs for it, the emulators and ROMs. I would just download them off the internet. They had bad translations a lot of the time, but I played the game. I didn't have to worry about it not saving or whatever, yeah, but I was like, I don't know how old I was at the time. I was young. Pokemon Go. Yeah, not that long ago. Like, I would say like 5 to 6 years ago, I downloaded an emulator in Android. The reason I like Androids is because I could download the same emulators that I used to download and play through the entire game online for free. Yeah, definitely not famous, definitely not famous. I thought there was a way to turn off notifications here. Yeah. Anyways, we're going to go to our day trading stream pretty soon here. I thought there was a way to turn off notifications. Schedule. Yeah, we're going to get ready to day trade, chat. I thought there was a way to turn off notifications here. Comments. I thought there was a way to turn off notifications on an individual video, no? You can. I never be Mario. Yeah, I'm trying to figure out how. I just can't figure out. There's got to be a way to turn it off on a specific video. It might need to be. Let me see. Let me check my phone. A lot of times this YouTube Studio on your phone is better. Let me check. Because again, we're going to go to our day trading stream pretty soon here, chat. Pretty soon we're going to go to our day trading stream. All right, guys. So yeah, look at the SPY dipped out. Is it time to buy the dip today? Do you think the market's going to run today? Is the question. Weird. All right, guys. Here we go. All right, we're going to go ahead and close this stream down and immediately bring you to our day trading stream that we got going on today. So we're going to close this stream down, immediately bring you to our day trading stream that we get to today. Let me make sure it's redirected here. Let me make sure this is redirected working. Yeah, we're going to immediately go to our day trading stream, chat. See, I'd like to turn off notifications for this one if I can, but let's see if we can edit. We'll figure it out. Yeah, it's all good. All right, guys, we're going to go to the stream. I'll see you guys over there. We are already redirected. And, yeah, we're going to start up the stream as well. Again, don't go anywhere. As soon as we close this stream, it's going to bring you to our day trading stream. So I'll see you guys over there. All right. All right, guys. So we are here.